While most AI investors are still focused on PaaS, Wall Street may already be looking at the next AI bottleneck because AI is no longer just running out of computing power. It may be running out of memory. Micron now says AI demand remains so strong that the company still cannot fully satisfy customer orders, and that may be changing the entire memory industry forever. Hi everyone, this is Stock Market Breakdown. If you want to go beyond just watching price moves and actually understand the logic behind the market, make sure to like and subscribe. Let's dive right in. For years, memory chips were viewed as highly cyclical commodities. Prices surged during shortages and collapsed during oversupply. But AI may now be changing that entire business model. Modern AI systems require enormous amounts of high bandwidth, low latency memory to continuously feed PaaS with data in real time. Without enough advanced memory, even the most powerful AI accelerators can become inefficient. As AI models grow larger and inference workloads expand globally, memory is becoming one of the most critical layers inside the AI infrastructure stack. This is one of the biggest reasons investors are beginning to treat memory less like a commodity business and more like strategic AI infrastructure. For years, memory was viewed as just another commodity hardware business, but AI is changing that fast. Today, the real limit on GPU performance isn't only the chip itself, it's how fast data can move. PaaS are like supercars. High bandwidth memory is the highway. If data can't keep up, even the most powerful AI chips become inefficient. That's why more Wall Street capital is starting to focus on AI memory again. During recent industry discussions, Micron management acknowledged that AI-related memory demand remains extremely tight. The company stated that even with aggressive expansion efforts, current supply still cannot fully satisfy customer demand. This reflects a much broader problem across the AI industry. As hyperscale cloud companies rapidly expand AI data centers, demand for advanced memory continues rising faster than manufacturing capacity can scale. And unlike traditional consumer electronic cycles, AI infrastructure expansion requires massive and continuous hardware deployment. This is creating one of the strongest supply-demand environments the memory industry has seen in years. This is actually a very important signal. The biggest market moves don't happen when demand simply grows. They happen when demand grows much faster than supply can expand. Right now, many AI companies aren't just short on PaaS, they're short on high-performance memory. Without enough memory bandwidth, AI training and inference become far less efficient, and that's why the entire AI supply chain is entering a prolonged period of tightness. Traditionally, the memory industry was known for violent boom and bust cycles, but AI may now be fundamentally changing that pattern. Unlike smartphones or PCs, AI infrastructure requires constant expansion as models become larger and inference workloads increase. This creates more persistent long-term demand for advanced memory solutions. Some analysts now believe the current AI-driven supply tightness could continue well beyond 2026. If that happens, memory companies may experience structurally stronger pricing power than in previous semiconductor cycles. The biggest problem with the traditional memory industry was always the short cycle, 2 years up, 2 years down. But AI may now be changing the entire industry structure because AI data centers won't suddenly stop upgrading the way consumer electronics cycles sometimes do. Models will continue getting larger. Inference demand will continue rising, which means demand for high-performance memory could remain elevated for years. To prepare for long-term AI demand, Micron is aggressively expanding its U.S. manufacturing footprint. The company recently completed a major modernization project at its Virginia facility and continues advancing larger long-term expansion plans across multiple states. Micron has also outlined a massive multi-year U.S. investment strategy that could eventually approach $200 billion. These facilities are expected to support future AI servers, hyperscale data centers, and next-generation computing infrastructure. This expansion strategy reflects growing confidence that AI demand is not temporary hype, but long-term structural transformation of the global technology industry. A $200 billion expansion plan says a lot. Micron clearly doesn't see AI as a short-term trend. The company is rebuilding capacity for what AI demand could look like over the next decade. This is no longer just another chip cycle. It's becoming a massive AI infrastructure build-out, and memory may be one of the most underestimated parts of the entire AI era. What do you think will be AI's next biggest bottleneck? Subscribe to Stock Market Breakdown.